Hello children, how are you? I hope you all will be fine and safe. Children, today I will start a new topic, that is treatment of goodwill. This is an important topic from the chapter Admission of a New Partner. So let's start. Children, first of all I will revise the concept of goodwill. So children, according the notes, goodwill is the treatment, goodwill is the result of the efforts which made by existing partners in the past. At the time of admission of a new partner who is going to acquire the right to share in future profits must compensate the existing partners by making payment to them. This payment is called premium or share of goodwill. So children, in simple words, goodwill is the reputation of the firm. This is the result of the efforts which made by existing partners in the past. So when a new partner admitted in the firm, that time he or she will bring the goodwill amount in favor of the firm for future profit, and this goodwill amount the old partners will be distributed to among them because they also do the sacrifice in favor of the new partner. It means all the old partners are giving their profit sharing ratio sacrifice in favor of a new partner. This payment is also called a premium or share of goodwill. So children, there may be the following 5 situations will be created related to treatment of goodwill at the time of admission of a new partner. So children, these are the 5 situations related to treatment of goodwill may be followed at the time of admission of a new partner. First, when the new partner brings his share of goodwill in cash. Children, according this case, if a new partner bring his share of goodwill payment in cash, then time the firm or the partners individually that time distribute this amount among them. So children, 5 situations related to treatment of goodwill may be followed at the time of admission of a new partner. First is when the new partner brings a share of goodwill in cash. Children, according this case, if a new partner brings a share of goodwill payment in cash to the firm or to the partner individually, that time firm will not be prepared the general entries in the books of accounts. Second is when the new partner is unable to bring his share of goodwill in cash. Third case is when the new partner brings only a portion of goodwill in cash. Fourth case is when the new partner brings goodwill in kind. And last case is when the goodwill is hidden. So children, at the time of treatment of goodwill, we will follow these 5 situations and also we will prepare general entry according these 5 situations. So first situation and first case general entry today I will be explained. So children, this is the chart of cases like accounting treatment of goodwill. Case first, when new partner bring his share of goodwill in cash. Second case is when new partner is unable to bring goodwill in cash. Third case is when new partner brings only a portion of goodwill in cash. Fourth case is when new partner brings goodwill in kind. And last case is when goodwill is hidden. So children, these 5 cases I will be discussed and step by step I will be explain how the general entry we will prepare accounting to treatment of goodwill. Okay, so today I will discuss first case. So in this case, when new partner brings a share of goodwill in cash, its meaning is when a new partner entered in the firm or admitted in the firm, that time new partner bring his share goodwill in cash. He can be paid this amount in 2 methods. In 2 ways. First, paid privately, and he can be paid or she can be paid the amount of goodwill paid by through the firm. So if a new partner admitted in the firm and he paid the amount in privately to the firm or to the partners, that time the firm will not be prepared the general entries in the books of account. Okay, but if the partners bring his share of goodwill in cash and he or she paid this amount through the firm, that time we will prepare these general entries in the books of account, like cash account debit to premium account, second premium account debit to sacrificing partners capital account. I hope you know what is the meaning of sacrificing partner. Sacrificing partner means which partner who sacrifice their profit sharing ratio in favor of a new partner, that is called the sacrificing partners. Okay, and third entry is if goodwill withdrawn, sacrificing partners capital account debit to cash account. Children, also you know the meaning of debit and credit. At the time of general entry, we will use debit, meaning is what comes in, and we will use the credit, what goes out. So on the basis of this concept, we will prepare the general entries. Okay. So children, case first, and how we will prepare the general entry. In the case of first, when a new partner bring his share of goodwill in cash, he can pay his or her amount by two methods. First, he or she can pay this amount in privately, and he or she can pay this amount by through the firm. So when he or she pay the amount, this amount will be paid in privately. That time firm will not be prepare any general entry in the books of account, but he or she or a new partner paid this amount by through the firm. That time these general entries will be prepared. So now I am explaining a numerical question how to prepare the general entries. So children, first case is when the new partner bring his share of goodwill in cash. When the new partner brings his share of goodwill premium in cash, there are two situations that arise. First, when the goodwill is paid privately, no entry is required to be passed in the firm's books of accounts because the amount of goodwill is not paid through the firm. Okay, also I had explained this concept. Again I will revise. When the goodwill is paid through the firm, when the new partner brings a share of goodwill premium in cash, it is transferred to the capital accounts of old partners in their sacrificing ratio because they do the sacrifice in favor of a new partner. So which goodwill amount will be transferred to old partner's capital account. Okay, this situation in turn gives rise two cases. First, when the goodwill is retained in the business. Second, when the goodwill is withdrawn. This meaning is, suppose a new partner give the amount for goodwill to the firm. Okay, and firm is not withdrawn this amount from the partner's capital account. So this case is when the goodwill is retained in the business. The partner has given the amount to the firm for goodwill and the firm is deposited in their books of account. He is not withdraw this amount. This is the case number 1. Second case is when the goodwill is withdrawn. Suppose the new partner has given the goodwill amount to the firm and firm will be distribute this amount in favor of old partner, and all the old partners withdrawn the goodwill amount according to their profit sharing ratio or their sacrificing ratio. That time which type of general entry we will prepare today, and now I will explain this. Okay, so first, when the goodwill is retained in the business, in this case the following general entries are to be passed: cash or bank account debit to new partners capital account to goodwill premium account. Relation being capital and share of goodwill premium brought in by a new partner. Second general entry will be premium account debit to all partners' capital account in case of fluctuating capitals or all partners' current account in case of fixed capital account. So children, now I am explaining a numerical question for general entry, how the firm will be prepared these general entry in the first case when the new partner bring his share of goodwill in cash. So this is the question. Ram and Shyam are partners. Their profit sharing ratio of 2:1. Bharat comes as a partner for 1/4 share of profit in the firm, which he acquires entirely from Ram. Bharat contributes rupees 15,000 capital and 5,000 rupees as goodwill. Past journal entry when goodwill amount is paid privately, goodwill retained in the business, and third case and third situation, goodwill is withdrawn, and also show the calculation of NPSR. So children, in this question we can prepare a working note. In this question there are two partners, Ram and Shyam. They admitted a new partner, Bharat. ठीक है, they admitted as a new partner of Bharat, and Bharat profit sharing ratio is 1/4. Share profit in future which he acquired entirely from Ram. So according this question, Bharat take hold the profit ratio entirely from Ram. Shyam will not contribute any amount of profit in favor of Bharat. Only Ram will be contribute hold the entire amount in favor of Bharat. This is explained in the example. Which he acquires entirely from Ram. Bharat contribute 15,000 capital. So now Bharat is a new partner, and he admitted in this firm. So he will bring with his capital and goodwill. He will bring the amount of capital and goodwill with his. So Bharat give 15,000 capital to the firm, and also 5,000 rupees goodwill amount also he has given to the firm. So now how we will prepare the journal entry? Okay, and the cases are goodwill amount is paid privately. Suppose Bharat is a new partner and he admitted in the firm. Suppose he bring the amount 15,000 rupees as capital and 5,000 rupees as goodwill, and he pay goodwill amount 5,000 in favor of Ram and Shyam. Suppose he gave this amount to privately for both the partners. That time we will not prepare any general entry according this situation. If a new partner paid the goodwill amount in favor of all the old partners in privately, that time we will not prepare any general entry in the books of account. Remember? Okay, so second, according the first situation, goodwill amount is paid privately. So first question answer is, so according this first question answer is no entry will be passed. Okay, second question is goodwill retained in the business. Suppose Bharat gave 5,000 rupees to the firm, and both the partners has not withdrawn this amount for their expenditure, for their personal use. So how that time which journal entry will be prepared? So I hope this question will be clear. If this partner give 5,000 rupees to the firm and firm is not withdrawn this amount for their personal use, so that time which journal entry we will prepare and which case will be apply goodwill retained in the business. So now we will prepare the journal entries according to the situation second, and second situation is goodwill retained in the business. goodwill retained in the business. Okay, that time journal entry will be prepared, cash account debit, because Bharat has given this amount in cash. It is also Bharat contribute 15,000 capital and 5,000 as goodwill. So he has given this amount in cash, cash account debit, total amount given by the firm to by the Bharat side 20,000 rupees. This amount is for Bharat capital account 15,000 and to premium for goodwill. Okay, 5,000 rupees submitted by goodwill. Submitted to goodwill. So according this, Bharat gave 15,000 rupees as capital to the firm and Bharat gave 5,000 rupees for goodwill to the firm. So according this, we will prepare the journal entries, cash account debit. So total, here you will be remember debit or credit means. Debit means what comes in and what goes out. So according this, what comes in, firm has taken the amount for cash 20,000 rupees from Bharat. To Bharat capital 15,000, Bharat gave the amount 15,000 for capital to the firm and 5,000 rupees goodwill amount to the firm. Okay. So the narration will be being capital and goodwill premium brought in cash by Bharat. Second entry we will prepare for goodwill. So premium account debit. How much amount used for goodwill? 5,000 rupees. So premium account debit. So goodwill will be deposit by 5,000 rupees. What comes in? Goodwill amount comes 5,000 rupees and to Ram's capital account. This amount will be taken by the Ram because in future all the profit sharing ratio will be sacrificed by Ram's account. Okay, so when the Ram will be sacrificed for the whole profit in favor of a new partner, so that time which amount a new partner has bring with with him or her, that time that partner will be taken this amount. So premium account 5,000 and this amount will be taken by Ram capital account 5,000 rupees. So according this case, goodwill written in the business, Ram has taken this amount but firm is distributed this amount in the account of Ram, but Ram is not withdrawn this amount yet. Third case situation is goodwill is withdrawn and also show the calculation of NPSR. NPSR means new profit sharing ratio. So goodwill is withdrawn. So now the Ram will be withdrawn this amount. Ram will be withdraw 5,000 rupees goodwill in for their personal use. Okay. So how will the prepare journal entry? This is the situation. Goodwill is withdrawn and also show the calculation of NPSR. So first I will prepare the journal entry for this case. So third case is when goodwill is withdrawn. Okay, so first journal entry, cash account debit 20,000 rupees in the firm to Bharat capital account 15,000 to premium account 5,000. Second journal entry, premium account debit 5,000 rupees to Ram capital account 5,000. Nation will be being goodwill or premium amount transferred to Ram capital account. Okay, now Ram will be withdrawn this amount. So how we will prepare the journal entry? Ram capital account debit 5,000 to cash account. So राम के राम के कैपिटल अकाउंट में 5,000 डिपॉजिट है. सो ही कैन बी विड्रॉन 5,000 रुपीज फॉर देयर पर्सनल यूज. सो नाउ आई हैव कंप्लीटेड 3 situations general entry. First situation is when a new partner bring his share of goodwill in cash and he paid this amount in privately to the partners or to the firm. That time firm not will prepare any type of journal entry in their accounts. Okay. Second case, goodwill retained in the business. When a new partner bring his share of goodwill in cash and the firm will retain this amount in the business, no one will be withdrawn this amount. That time which journal entry we will prepare, also I had explained this. Third case is, and third situation is, goodwill is withdrawn and also show goodwill is withdrawn which amount a new partner has given to the firm. So this goodwill amount when a old partner withdrawn and how he has withdrawn this amount, this journal entry I had explained in this video. Okay. So children, according your NCERT book, treatment of goodwill. As stated earlier, the incoming partner who acquires his share in the profit of the firm from the existing partner bring in some additional amount to compensate them for loss of their share in super profit. It is termed as his share of goodwill, also called premium. Alternatively, he may agree that goodwill account be raised in the books of firm by giving the necessary credit to the old partners. When a new partner is admitted, goodwill can be treated in 2 ways. First, by premium method, and second is by revaluation method. Premium method is meaning is when the new partner given the amount for goodwill in cash, that is also called premium method. Premium means goodwill. When a new partner give the amount for goodwill in cash or in cash to the firm, that is also called premium method. Premium method, this method is followed when the new partner pay his share of goodwill in cash. Already I had explained this concept, but I have explained this concept for your NCERT book, from your NCERT book. Okay. The amount of premium brought in by the new partner is shared by the existing partner in their ratio of sacrifice. If this amount is paid to the old partners directly, privately by the new partner, no entry is made in the books of the firm. Also, I had explained this concept when a new partner given the goodwill amount in cash to the firm in privately or individually, that time the firm will not be prepared any general entry in the books of account. Okay, made in the books of account to the firm. But when the amount is paid through the firm, so second case is when a new partner bring his share of goodwill in cash and he paid this amount to the firm. Okay, that time some general entry we will pass, which is generally the case the following general entry are passed. Already I had explained this general entry with the numerical question. Cash account debit to goodwill account, amount brought by new partner as premium, which amount the new partner has brought by him. Goodwill account debit to existing partner capital account individually. So children, also a question in your NCERT book. Sunil and Dilip are partner in a firm sharing profit and losses in the ratio 5:3. Sachin is admitted in the firm for 1/5 share of profit. He is to bring 20,000 as capital and 4,000 as his share of goodwill. Give the general entry in the case when the amount of goodwill is retained in the business. Second case is when the amount of goodwill is fully withdrawn by the old partners. And third case is when 50% of the amount of goodwill is fully withdrawn. So children, in this case, there are two partners, Sunil and Dilip, and there are old partners, and they has admitted a new partner in the firm, Sachin, for 1/5 share of profit. Sachin bring with him 20,000 rupees as capital and 4,000 rupees for goodwill. Now the firm has prepared the journal entry according three situations. First situation is when the amount of goodwill is retained in the business. Sachin has given the amount of goodwill and has given the amount of capital and goodwill to the firm, and the firm has not withdrawn the amount of goodwill for their personal use or for their personal expenses. Personal any expenses. So that time which journal entry will be passed? Second case is when the amount of goodwill is fully withdrawn. If Sachin has given the amount 4,000 goodwill to the firm, and firm or all partners has withdrawn this amount, fully withdrawn, they are fully withdraw this amount from the firm, that time which journal entry will be prepared? Third case meaning is when 50% of the amount of goodwill is fully withdrawn. In this case, Sachin has given 4,000 rupees of goodwill to the firm. Okay, and this amount will be debited in the account of Sunil and Dilip. After some time, Sunil and Dilip has withdrawn 4,000, 50% is 2,000. And after some time, Dilip and Sunil withdrawn this amount. Okay, that time which journal entry we will pass? These are the cases by which we will enter the journal entry according to treatment of goodwill. So children, today I will explain case first. When a new partner bring his share of goodwill in cash, that time which journal entry will be passed in the books of account of the firm. So this case I hope will be clear. In second video I will explain second case. So take care. Goodbye.